Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Good morning and welcome to Modern Investing Techniques, episode 66. I'm Patrick in Vancouver. Today is June 4th, 2026. Let's find the signal in today's noise and put your portfolio to work. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Rising U.S. jobless claims to 225,000 signal potential Fed easing that could lift Canadian dividend payers in your RRSP this quarter. Markets closed lower with the S&P 500 at 7,554, down 0.7%. The NASDAQ Composite finished at 26,854, down 0.9%. The TSX Composite closed at 34,802, down 1.0%. The portfolio sits at year-to-date plus 1.44% against the NASDAQ's plus 15.57%, for alpha of negative 14.13%. Fed speakers are now questioning whether current rates remain restrictive enough after jobless claims came in at 225,000 versus 214,000 expected. With macro signals mixed, let's look at how we're applying that caution in today's simulated trade. Fed speakers emphasizing the duration of the balance sheet over its size point to a refined approach for fixed income allocation. Duration mismatch between the Fed's holdings and outstanding treasuries directly influences term premia. Investors can adjust by extending ladder maturities when real rates compress. This matters today because rising inflation expectations could make standing still more accommodative, prompting earlier rate adjustments. Implement by screening for intermediate duration ETFs on platforms like Questrade using the 5 to 10 year Treasury segment, and rebalancing quarterly against your RRSP target. The approach worked best in 2022 to 2023, when duration-driven volatility rewarded those who shortened exposure ahead of policy shifts. Risk lies in misjudging inflation persistence, which could extend drawdowns. That same discipline showed up in yesterday's flash trade outcome. This is a simulated trade for educational purposes only. No real money is involved. We are skipping the weekly hold today because jobless claims beat and Fed duration commentary create mixed macro signals without a single high-conviction equity catalyst meeting volume confirmation rules. Broad indices sit below recent highs with no individual name showing clear support tests or volume spikes above 20-day averages in non-restricted sectors. Entering without confirmed volume risks repeating recent momentum stalls. Maximum acceptable loss is kept at zero by staying sidelined. Skipping a trade when criteria are unmet protects capital and reinforces that patience itself is an active strategy. Listeners learn to define explicit entry filters in advance rather than forcing action on marginal setups. While we refine entry filters, the Fed is quietly reshaping fixed income strategy. Last flash trade was SNON on a momentum entry after a raised revenue forecast, plus major AWS partnership. We entered at $237 at market open and exited at $239.20 at market close. The position gained 0.93% or $9.28 on a $1,000 simulated stake. The trade gained 0.93% while the NASDAQ fell 0.9% over the same window, delivering 1.83% alpha. The partnership catalyst delivered a modest positive move, yet the quick fade underscores how fast momentum dissipates without sustained follow-through. The lesson is that partnership catalysts fade fast without volume confirmation above the 20-day average. Now, speaking of how duration management fits into broader allocation, here is the strategy spotlight. Duration mismatch between the Fed's holdings and outstanding treasuries directly influences term premia, so investors can adjust by extending ladder maturities when real rates compress. Rising inflation expectations could make standing still more accommodative, prompting earlier rate adjustments. Screen for intermediate duration ETFs on platforms like Questrade using the 5 to 10 year Treasury segment and rebalance quarterly against your RRSP target. The approach worked best in 2022 to 2023, when duration-driven volatility rewarded those who shortened exposure ahead of policy shifts. Risk lies in misjudging inflation persistence, which could extend to drawdowns. Duration management is one piece of a broader allocation approach we'll unpack next. Imagine you bought XEQT last month expecting broad equity exposure, only to watch a single sector rotation cut your monthly return by 1.8%, while bonds held steady. The mechanism at work is modern portfolio theory's core math. Combining assets with low correlation reduces portfolio standard deviation without lowering expected return, moving you closer to the efficient frontier where risk-adjusted returns peak. Professionals always check the 36-month rolling correlation matrix between equities, bonds, and alternatives before adding a new ETF, something retail investors skip when chasing recent winners. Canadian examples show VGRO delivering smoother drawdowns than pure equity during the 2022 rate hike cycle because its 20% fixed income sleeve offset equity losses. The biggest mistake with asset allocation is treating age-based rules like 100 minus your age in stocks as fixed rather than starting points. Instead, always run a quick risk tolerance questionnaire on your brokerage site and set rebalancing bands at 5% drift from targets using calendar or threshold methods. While tracking probabilities, 3 quick developments deserve your watch list. Polymarket lets you track crowdsourced odds on macro events such as Bitcoin trading below $50,000 in 2026 to gauge sentiment extremes before they hit traditional markets. This gives an edge by surfacing tail risk probabilities faster than lagging analyst notes, useful for Canadian investors hedging TFSA crypto exposure. Access via the Polymarket platform website with no subscription required for basic views. Amazon committed over 10 billion euros to modernize fulfillment centers with next-generation conversational robotics, rolling out in the first half of 2027, alongside plans to add 25,000 European fulfillment jobs. This scale of capex signals sustained logistics demand that could benefit related industrial suppliers. Add AMZN to TFSA watchlist for any post-event pullback below recent closes. Analysts lifted the 2026 S&P 500 closing forecast to 7,620 from 7,500 in the prior poll, reflecting modest upward revisions amid ongoing earnings visibility. Increase broad U.S. equity ETF allocation by 2% in RRSP if next week's jobs data stays soft. FT reports that the majority of hyperscaler AI capital investments are currently showing negative returns, highlighting payback timelines longer than initially modeled. Trim any single stock AI exposure above 5% of portfolio until free cash flow metrics improve. Before we wrap, here is your Monday homework. Open your brokerage screener, filter for consumer discretionary names with 20-day volume above average and RSI between 40 and 55. Then add the top 3 to a new watch list for potential Monday review. We'll review any setups that meet criteria on Monday's episode. Portfolio performance across 29 simulated trades shows 18 wins, 10 losses, and 1 break-even for a 62% win rate. Cumulative profit and loss stands at $416.37, with an average return per trade of 1.44%. Best trade reached plus 20.11%, while the worst reached negative 11.35%. And the current streak is 2 wins. Our AI analysis is learning from recent momentum stalls and adjusting entry filters accordingly. Before we wrap, watch for how consumer discretionary names with volume confirmation set up ahead of next week's jobs data. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow. And before you go, this show is part of the NARA network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give Fascinating Frontiers a listen. The most fascinating news from space and science. You can explore the whole lineup at narrownetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't last?